the emerging market. But despite that, most of the Asian markets are positive. Uh, Yesterday, we saw a sharp sell-off in mid-cap and small cap stocks, though Nifty continued to remain range-bound or positive also. But we saw sharp corrections in mid-cap and small cap, mainly driven by fear about the slowdown. And the small cap has outperformed Nifty in last 1 year by almost around 10%. So that is somewhere getting corrected. And most of the stock which are highly priced got higher bidding. So the process can continue in the coming period as well. So need to be careful for short term. Uh, Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we saw some mixed performance and morely volatile during the day. Nifty right now trading near the support zone. First immediate support that is 23,070 and 23,000. If Nifty break this range, then we expect some pressure towards 22,700 and 22,500 at downside. Overall, last 2 to 3 trading session, we saw that Nifty struggled to sustain about 23,340 and 23,500 range. And that is a major resistance facing for index. And if Nifty break this range, then we expect further rally towards the long-term moving averages, that is 24,000 in above range. But if Nifty today's we break the 23,070 range at downside, then we expect some pressure increase in the index. And Bank Nifty also trading near the support zone. First immediate support place around 48,640, and below that, then we expect further sell off towards 48,340 and 48,000 at downside. Upside 49,000 is the first immediate resistance, and then 49,270 is the next majorly resistance place in Nifty Bank Nifty. So both index trading in crucial range, and if break that range, then we expect some pressure to be increasing in both index. Stock specific Apollo Tyre looks positive at current level. BL also looks positive at current level, and Bajaj Finserv also given a good rally yesterday. We expect some positive side in Bajaj Finserv, and Sun Pharma also trading in the good range, and we expect some positiveness in pharma sector, and that is Sun Pharma looking good at this level. Negative side, Godrej Property break the important support that is 2270, and yesterday trading below that important support zone, and we expect some pressure to be continue in Godrej Property. Downside 2200, and below that next immediate support place around 2170 in Godrej. So we expect some pressure in Godrej Property. Adani Port also trading below the important average, and yesterday closed near the 1100. And if 1090 break, then we expect some pressure in Adani Port also. Apollo Hospital also trading near the support. If break that, then we expect some pressure. Right now trading within the range. Downside 68 is the first immediate 6800 first support, and upside 970 next immediate resistance. This trading within the range. So overall we expect some mixed performance in stocks also. That's it for technical derivative I can carry.
Yeah, thank you, Vikas. On the derivative front, there are some early indications of a bottoming out for the near term in Nifty. The open interest after a gap of 3 years has breached above 1.8 crore in Nifty. This had happened during that COVID time, so lots of shorts have been built in into the system. And generally, when this happens, when the open interest for Nifty goes towards that 2 crore levels, you see a reversal on either direction, and now because Nifty is going down, you can see a reversal on the upper side, which is a good sign. PCR OI has been around that oversold zone, and VIX is above the 15 level. So all signs are there for a reversal at this point of time. Also, the 23,000 put has the highest put base, and we are seeing good amount of open interest increase in 23,100, 23,000, 22,900 put strikes, which does tell us that some good support level can be found at this 23,000 levels. So after the initial hiccup for today, we will see some good buying coming in Nifty and Bank Nifty, which can take the indices upwards. The immediate resistance for Nifty is around 23,500 odd levels. Once that is breached, you can see further up move. From the stock specific front, most likely you will see a good short covering rally in banks led by HDFC Bank. Also, there can be some good buying in the IT sector, specifically Infosys and TCS. So, yeah, look out for the same. So that's it from my side. Like to ask the fundamental team to take over, please.
Thank you. Good morning, everyone. On the results front, yesterday Hindustan Unilever posted the result. It has posted disappointed performance with respect to volume growth and bottom line. Overall top line grew by 2%. This was mainly led by growth in realizations. Underlying volume growth was flat during the quarter versus the street's expectation of low single digit growth. Premium segment continued to grow faster than other segments. On the margin front, gross margin and EBITDA margin stood at 50% and 23.5% respectively. Overall PAT grew by 19%. This was majorly on account of profit from divestment of Pureit business. The company has made the acquisition of beauty brand Minimalist. This is mainly to strengthen its premium portfolio, and board has also approved the demerger of its ice cream business. The company has highlighted that current demand trend to remain subdued based on the rural market dynamics, and it is expecting low single digit price growth with stable EBITDA margins in the range of 23 to 24%. We are long term positive on the company, where it is currently trading at a PE of 47 times to FY26 EPS. It is providing limited upside over the near term. Polycab India Limited posted the result broadly in line with expectations. Revenue grew by 20% on a YY basis. Here, the wires and cable business grew by 12%, but it has degrew by 7% on a sequential basis. This is mainly due to slowdown in wires segment. The downtrend in copper prices has led to this weakness in the wires. FMEG segment grew by 45% on a YY basis on a lower base, and 7% on a sequential basis. Overall operating margin reported at 13.8% versus the expectation of 12.4%. The stock is trading at a PE of 39 times to FY26 earnings, and we are positive on the company. Pidilite Industries Limited posted the results in line with expectations. On the volume front, it has delivered robust performance with volume growth at 9.7% versus the expectation of 6.8%. Revenue grew by around 8%, and gross margins improved by around 284 basis points over previous year. This is on account of lower input costs. Overall operating margin reported at 23.7%. The stock is currently trading at a PE of 56 times to FY26 earnings, and we will provide the update post the con call. Yesterday, Manorama Industries hosted the con call. The management has highlighted that based on the current order book, it is comfortable to achieve its guidance of rupees 750 crore of revenue in FY25, and it has also revised its margin guidance upwards from 20 to 22% to 23 to 24%. Further, it is expecting FY26 revenue more than 1,000 crore with expected margin expansion. Also, the company has announced few projects which are based on the forward and backward integration, which will further improve the margins over the medium to long term. and also it is aiming at expanding its global presence, where it is currently focusing on the MENA region. We are positive on the company, where the stock is currently trading at 77 times to TTM earnings. Thank you.
Good morning. A couple of results. Persistent reported its numbers and they were broadly in line with the expectation, wherein the revenue has grown 4.6% quarter on quarter on constant currency basis. Furloughs impacted 100 beeps to the revenues, while acquisitions made contributed 30 beeps during the quarter. EBIT margins expanded 90 beeps quarter on quarter on the back of better utilizations by the company. Company aims to expand margins further by 200 to 300 beeps in the coming quarters, backed by revenue growth and better utilizations. On the demand environment, company has rated that the business is as usual with no significant uptick in discretionary spending. The next 1 or 2 quarters will be crucial in determining if the positive mood in the demand environment translates into actual growth or not. Further, company believes that it is on track to achieve its aspiration to become a $2 billion company by FY27, and a new milestone they have set for themselves of $5 billion by 2031. Company is also considering to scale up the acquisitions in Europe region to achieve its aspiration of to gain 12 to 15% market share there. Stock is available at 51 times FY26 expected earnings. Continuous sequential revenue growth, which the company is showing for the past 19 quarters, justifies this premium valuation the stock garners. Outlook continues to remain positive for the company. One can accumulate the stock on dips for long-term benefits. Secondly, Zensa reported its numbers ahead of expectations, wherein dollar revenues grew 0.7% quarter on quarter, ahead of expectation by strong growth in its manufacturing vertical. The EBIT margins also expanded 70 beeps sequentially. Company aims to maintain the margins at mid-teen levels in future after making required investment into the business. Company is seeing improved win rates over the past couple of quarters, and the deal pipe remains strong for the company. So stock is available at 22.6 times FY26 expected earnings, and one can accumulate the stock with a long-term perspective. Finally, Coforge also reported its number ahead of expectations, wherein the revenue has come in at 8.3% growth, far ahead from what was expected by the street of 4.6%. Consolidated EBITDA margins came in at 17.8%. And for the acquired Signity, EBITDA margins have come in at 17.3%, which is a jump of 600 beeps from the past 3 quarters ago. So these margins company is expecting to move up further in the coming quarters. Adjusted EBIT margin for the company has come in at 11.8%, a flattish quarter on quarter. The company has reiterated in the conference call that these margins will touch 13.5% by Q3 FY26 with reduction of ESOP cost. Stock is available at 43 times FY26 expected earnings, and one can accumulate the stock for long-term benefits. Thank you.
Good morning. HDFC Bank posted its results. The results is in line with expectations. Advances grew by 2% year on year. Net interest income came at rupees 30,653 crore, 7.7% year on year versus expectation of 30,540 crores. The profit stood at rupees 16,736 crores, 2.2% YOY versus expectation of 16,573 crores. It's a gross NPA where 1.42%, while net NPA was at 0.46%. In the con call, the management stated that there has been a noticeable pickup in rural demand and government spending has increased after a slowdown in the first half of the year. Over the past year, the bank has expanded by adding over 1,000 branches. Following the merger 18 months ago, margin levels remain flat at 3.4%, and also cost to income also remain stable. The synergy benefit may come in coming period. Also, the management stated that the bank will prioritize growth and continue to reduce the CD ratio. FY25 will grow at a slower pace than the system. FY26 will align with the system, and FY27 will outpace the system. So the stock is trading at attractive valuation of PE of 16.3 times FY26 EPS and 2.3 times a trailing price to book value ratio. Overall, a flat quarter. However, the bank has maintained its margin levels and improved its CD ratio below 100%. AUM growth came at 7%, which can improve to industry growth in FY26 and outperform in industry in FY25. So overall, the outlook is positive for the company. Also, Housing and Urban Development Corporation posted its results. The results have improved. Loan book grew by approximately 41%, with around 40% exposure to affordable housing. Its affordable housing portfolio is expected to expand under the Pradhan Mantri Awas Yojana 2.0. NII grew by 47.3% year on year. Provisions and NPA improved. Its gross NPA came at 1.88% and net NPA came at 0.27%. Profits grew by 41% YOY. The stock is trading at 2.5 times trailing price to book value. So the outlook is positive for the stock. Thank you.
Yeah, apart from this, yesterday Elecon Engineering reported numbers. Revenue growth was subdued below expectations, but the margin has shown improvement. But post the market hour when the company declared its presentations, the revenue order booking has shown good smart increase of almost around 40%. So we saw some corrections in the prices post result, but looking at this order booking of growth of around 40% year on year looks positive. So stock may see bounce back today in today's trade. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might witness gold testing 79,300, whereby one can initiate a buy with a strict stop loss of 79,000, and on upside again 79,650, 800 is the target where one can profits. Silver also, if prices are sustaining 91,300, then one can buy for a pullback till 92,000, 92,500, and maintain a stop loss of 90,700. And in metals, prices are expected to correct. Copper, one can initiate a sell around 830 with a stop loss of 835. Though if prices are sustaining below 828, then one can initiate a sell, and we are expecting 824, 822 on downside. So sell on rise is the view. Whereas in zinc, prices have already tested to 72, 75. So a pullback can last till 275, whereby again selling pressure could be witnessed. So wait for that. And in aluminum also, one can sell around 254 with a stop loss of 256.50. On downside again, 250 is the target where one can book profits. And in crude oil, prices are expected to correct till 64.50. So one can sell around 65.50 with a stop loss of 67.20. And natural gas prices are expected to test 350 on upside. So buying around 338, 335 is recommended with a stop loss of 330. And on upside again, 350, 355 is the area where one should take profits. So that is from us. Thank you very much.